Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in, no video today because I don't want to put clothes on. So we're looking at SPY, CGC, CRON, APH, ACB, TLRY as usual. The setup we had into the morning was the same for the tech sector, for SPY, for the Canadian MJ sector. Correlations were everywhere. And looking at extended hours, we headed into the day saying, all right, we had a solid bounce yesterday into the afternoon. The bulls have to hold the lower pre-market as the hourly higher low and break the high of yesterday to change the hourly trend. We failed to break the high of yesterday at the open, and then we broke the lower pre-market. That's red flag number one, and then we had an all-out dump. This is one of the weakest market days that I've ever seen, and that is because of the way it occurred. And the S&P 500 was just cooling itself off the entire day. When you have a 2.5% down day and the 5-minute RSI from the open, there was one time we got really oversold. Every other time, these little bear flags cooled off the RSI, and just a very rough theory. I believe that's not allowing buying bots to trigger with RSI levels being hit. Even the 15-minute time frame, again, a huge all-out dump. The 15-minute RSI got oversold once. Then for hour after hour, as we continued with lower highs and lower lows, we didn't get oversold again for multiple hours. So at this point, the market is definitely in trouble. There's no doubt about that. In my opinion, I still anticipate the February lows to hold and for us to form a monthly higher low, keeping the market uptrend. But if we're going to lose that uptrend, we're going to see a bounce to cool things off. And then in my opinion, it would be a lower high and then we would lose support. I would be very surprised if it's just an all-out dump in 1 month, taking out that 252.92 support level from where we currently stand, which would be about a 5% move, 4% move from where we currently stand. Again, it's possible, but I don't think it's the most likely scenario. So from where we stand now, the weekly time frame, a month in a row of downside, and the dump in February, it's slightly different, where the dump was really fast and the bounce was V-shaped, and this is more slow and drawn out. We had a little dump before, let's see, it was a 7-day dump, a 2-day bounce, a 1 more day to the downside, and then the V-shaped bounce. Here, we have the 7-day dump, we have a 5-day bounce, and now it took more days to head down to lower lows. So we will note if we see huge volume. Look at the volume marking the bottom, volume climaxes last time in February, and the volume's not there at these levels yet. The volume, look at the high volume indicating the initial bounce, and until we see huge volume of both bears and bulls battling it out to give us climaxes, we're not going to be looking for much of a bounce just yet. So heading into tomorrow, the hourly RSI is just now getting down oversold. If we see an extended hour, weak hourly bounce to cool off RSI levels, it can be another very bearish day tomorrow. If we see a gap down open in the markets, I'm going to be looking at some potentially extreme RSI levels to look for a bounce to initiate. But as of right now, this is a scenario where the market weakness is perfectly timed with Canadian MJ hitting its sell the news event. And this is, if you are sitting in cash, this is just like, couldn't get any better in terms of the timing of how this is playing out, because it's going to cause things to get to extreme levels. And some would already argue that it has already done that in terms of bringing the price of CGC back down towards the Constellation deal levels, or back at the Constellation deal levels. But things can get more extreme. Again, in the short term, emotions make markets irrational, both to the upside, as we saw with Bitcoin and Canadian MJ, and both to the downside in this kind of scenario. So I'm absolutely going to be looking at long-term entries in Canadian MJ once some of the market weakness fears subside. Where we stand on Canadian MJ, it's a little bit more bullish with its correlation to the S&P 500, but we have bear flags on the daily time frame, and we can absolutely see lower lows. One thing that does stand out that a member pointed out is the volume is low today. And in my opinion, a lot of big money made bullish entries yesterday, and they're in red positions right now, in my opinion. And that's because we saw big bull volume buying the dip on the gap down and not a lot of bear volume giving a lot of that move back. So I think it was kind of a blindsided move where Big money said, all right, we're ready for this bounce. And then the S&P 500 said, no, we're dumping. And that is obviously preventing any follow through on the bounce. So the fact that we didn't break the low of yesterday is a positive because, again, SPY broke it so significantly to lower lows. And let's look at the correlation on the 5-minute time frame for SPY and CGC. Again, it varies throughout the day. All the time, the correlations are changing. But in general, it's definitely there. So, I mean, you look at that chart, there's significant correlations. So it is obviously worth continuing to watch it. The 4-hour time frame is the most clear in my opinion. If we drop down and break 36.62, it's just a lower high and lower low on the 4-hour, and we're back down into oversold conditions on the 4-hour. That RSI is 27, and if we drop to lower lows tomorrow, that RSI is going to be back in the low 20s. So again, I am going to be interested in longer term positions. And, you know, I talk to friends and family, and it's much easier for me to talk about long-term positions in Canadian MJ in this kind of environment than it is 2 weeks ago, because I'm not confident having them get into a hype euphoria market. I am confident in them getting into a fear and blood in the streets kind of market. So I'm keeping that in mind as well. I do know people with cash laying around that are looking for a place to put it to work. But it's all about this 4-hour trend. And if the bulls can form a higher low and hold the low of yesterday, they'll give us a 4-hour equilibrium with key resistance. We had a bit of a fake out, what some people might call a fake out. And I'm going to attach at the end of this video, rather than butterflies and funk, we're going to put some information from the live stream today. Because SPY started the day with a break of the high of yesterday. And it only broke by 5 cents. That's not convincing at all. That's, 0.1% or whatever. But it clearly stood out to me that there was a hidden wall of resistance at 42.43. And I'll just put the first, 5 minutes of me doing the live coverage today, and we will look at what stood out to me and what the red flags were. So at this point, it's all about the 4-hour tomorrow. Bulls really want to hold that higher low and give us an equilibrium. Otherwise, lower highs and lower lows continue, and we're going to look to the daily chart to get into oversold conditions if that is the case. The next support below 36.62 is down at psychological levels, 36, 35, and then 34.16. There's a gap on this daily chart at 33.88, and there's another one all the way down at 26.37. I would be shocked to fill those levels, but there is a lack of support if we do break to a lower low below 36.62. So that is where we stand. I'm personally all cash. I did make one trade attempt today with a very small loss, and otherwise I was just sitting mostly cash and being very patient to wait for opportunity to strike. Definitely missed bearish downside in the market today, but I entered today saying I'm going to trade way less, get off the computer a lot more, and I stuck to that, so I'm fine with that. But again, if we bounce on the 4-hour, it's a bear flag on this daily time frame. We're going to have to see a bounce over 44 essentially to negate the potential of this bear flag. Bear flag is when you have the dump and a weak bounce attempt in a parallel channel, which is exactly what we have. So even if the bulls do maintain support tomorrow, they are not out of the woods. We have to get bounce follow through in order to negate the potential bear flag. So checking it on CRON, right down at that low. And again, you can compare the individual names and say on the 4-hour time frame, CRON is much closer to a bear break than CGC, and APH is much further from a bear break than CRON. So just comparing them in that regard, you can almost rank them in terms of strength. But right now for CGC or for CRON, 751 is support. Resistance, anything under 888 is just a lower high. And again, we could not break that resistance level first thing. The bulls had to break the high of yesterday. We rejected by 14 cents, and then the bears took over. So as soon as you're unable to break that resistance and get follow through, the psychology of traders shifts and say, I better take my profit, or I better go bearish and just put my stop loss over 888. There's very little risk there. If we're trading at 874 and we start to see weakness and we drop down to 860, you can say, well, I'm going to enter bearish and just exit if we break 888. So it gives the bears confidence, and it takes away confidence of the bulls when you're unable to get that follow through first thing. So the 4-hour time frame, very close to a bear break. If the daily chart breaks under this support level, again, a lack of support nearby, 7 psychological, and then 663 are the next 2 support levels. APH, daily inside bar, 4-hour is the one to watch. Support of 1376, resistance of 1733. Bulls have to form the higher low. Declining bear volume on the 4-hour is certainly better than increasing bear volume, but we'll look for a tightening range if we can hold 1376 first thing. Below 1376, again, a lack of support. 1334 and 13 psychological would be the next levels that we're watching. And ACB on the 4-hour, closer to a bear break. So in terms of distance to a bear break right now, APH is the furthest. Then I would say CGC, ACB, CRON for the 4 that we've already looked at. Low, high, bulls have to hold support of 918. Otherwise, there's a gap to fill down at 864. And to wrap it up with TLRY, they're probably in the middle of the pack in terms of distance. Probably number 2, actually, behind APH. Bulls have to hold 10110. We know how important 97 support is. If 97 breaks, the next clear daily level is 7250. Again, it's bear flags on the daily time frame. So at this point, the bears have the upper hand in both the market and the sector, and it is up to the bulls to prove otherwise. We cannot give the bulls any benefit of the doubt when you're in a trend and it's so clear like this on multiple time frames. You can't give the other direction any benefit of the doubt because it's what you want to happen. You have to make them prove it to you, and they have to prove it with volume. Volume is our prove it indicator to indicate that a move is for real, and we have to see breaks of these 4-hour lower highs as step number 1 for this bounce to get any kind of follow through. If we do drop to lower lows, I'm going to keep monitoring the S&P 500, and any decisions I make for entering long-term positions are going to be factoring in what the S&P 500 is doing, what our RSI levels are on longer-term time frames, and things of that nature. So there's opportunity. I mean, if you got cash around, there's definitely opportunity. If you don't have cash around, days like today are rough. But if you're in it for the long run, honestly, checking every day is probably not a good idea. So here we'll wrap it up at the end of the day with this is me with the market open and live talking about what was going on with CGC first thing. I hope you have a good rest of your day. We'll continue to check back in as always. Again, that USMJ video is out now, public on the YouTube channel. Would appreciate any likes and shares. Ideally, we want to get as many people to see that as possible to try and learn how to do some fundamental research and make some decisions with their investments. Thanks again. See you tomorrow. And actually, I'll try and see you tomorrow, but I'm about to be traveling for the next couple of days, so we might not get a video every day. I'd rather see Canadian MJ make their bull breaks during regular trading. It looks like the only one to make this bull break right now is CGC. CRON's right up on that resistance. CRON's going to test it first thing. So again, we have to be a bit more cautious for Canadian MJ bulls just because SPY bulls are not proving themselves at this point. So we rejected on CGC first thing. Going to test it again. I got my finger on the trigger. $42.42 looks like a bit of a hidden wall of resistance on CGC. And it is. That should have broken. Something's up with 42.42. Have to break that level real quick because it's standing out now that something's going on and someone's putting a hidden wall there. So I'll buy a break of 42.42, but have to break that level. Holding up well. We're not rejecting hard from that point just yet. So SPY on the 5-minute time frame. CRON not able to break resistance as well. So now a bit further pullback on CGC. Let's see, the most important level for CGC to hold for me is down at 41.75. Break 41.75 without breaking 42.42. And I see we broke it by a penny here, but that doesn't count. That's a red flag. And I would call that essentially a double top with the high yesterday. So that was a notable rejection. It was very clear that someone was either unloading a significant amount of shares on 42.42 or someone was intentionally keeping the price from being able to break that resistance. And now we're pulling back as a result of that. People are taking profit with the inability to see continuation first thing. So here's the support test of the 5-minute uptrend, 41.75. And now we're just looking at the low of pre-market, 41.34. So the red flag was there first thing. Let's see if the bulls buy this dip.